All right, we were just talking here in our office not only about the sell-off, but what is benefiting in the middle of the sell-off, because what's hurting the Dow is certainly helping bonds. The 10-year Treasury right now, which had been getting so close to 1%. I make that sound like a hyperinflation moment, but considering the fact we had been touching zero, it was very close to that. Right now, it has since gone up in price and down in yield to bring us to where we be right now at 0.672%. Mortgage rates, too, which don't dovetail to the same hour and minute that you get this 10-year Treasury yield, to which many mortgages are fixed at 3.21%. So you would think in this environment, houses would be selling like hotcakes and all that. They're not doing that badly. Mortgage demand is very strong. But in this environment, and as we come out of this sheltering here, maybe we'll get a gauge of where things go from here. Anthony Hsieh joins us right now, the Loan Depot chairman and CEO. He's the former E-Trade Mortgage CEO, former Lending Chief President and CEO. I think it's safe to say he knows of what he speaks when it comes to this industry. So, Anthony, your thoughts on what's been happening with interest rates, because you could pick your day, but they're still very, very low. Mortgage applications are still running at a double-digit clip. How long do you see that continuing?
What we need to understand a little bit, is that the relationship between the 10-year yield and mortgage rates have somewhat dislocated a bit since COVID started. So there used to be a lot closer relationship, but now, it seems like there's a new trend, because keep in mind that the feds are heavily buying mortgages in support of supporting the financial system behind our housing market. So although the interest rates are moving up and down based on what's happening in our economy, particularly as to sort of how we think there's a V-shaped recovery, you'll see the yield spike, for example, it went up to 85 basis points, I think, or something, or 95 basis points. Many predict that it may even go back up to over 1%, but it hasn't really moved interest rates for mortgages much. So there's not a direct correlation and is volatile of a move as before.
So a lot of people are applying for mortgages. They're definitely hot to get a home, or at least get the process going. Do you see that continuing?
I do. I mean, one of the things that industry has reported is the fact that, more and more people are home and they're getting on websites looking for homes. And, this is where we exercise. This is where we look for investment. This is where we're conducting school. And I think a lot of folks that have accumulated wealth through their entire life, as well as the last boom cycle, which is going on arguably 10, 11, 12 years now. I think many are making the decisions. Maybe this is time for us to explore something a little different, a little bigger, that matches our lifestyles a lot better. And also keep in mind, Neil, that listings are down, right? Not a lot of homeowners want to go through the market. So your inventory's down, builder business is up. The resiliency of this country has just been fascinating to watch since the start of COVID. But real estate right now, surprisingly, it's actually very strong.
All right. Hopefully those underlying fundamentals remain. Anthony Hsieh, thank you very, very much.